Engage the emergency thrusters, full backup power," echoed the screams of some who bought Voyager Technologies stock as it entered into an immediate plunge following its recent IPO. Yet there could be growing optimism and fuel for a change of course back up towards the stars. Financially speaking, Voyager's recent Q2 earnings showed an adjusted EPS loss of 60 cents, yet revenue of $46 million, which represents a 25% increase compared to the previous year, driven by an 85% growth in its defense and national security segment. This segment was the standout performer, with its revenue increasing from $19 million to $35 million, and adjusted EBITDA improving from $1 million to $1.8 million. The Starlab Space Stations segment showed progress, with cash receipts increasing substantially and its adjusted EBITDA loss narrowing. Voyager completed its IPO during the quarter, raising $440 million before fees, and established a $200 million revolving credit facility, significantly strengthening its financial position. It's also made strategic acquisitions, including Electromagnetic Systems, Inc., EMSI, a California-based developer of AI and machine learning software for space-based radar systems. The acquisition aligns with Voyager's focus on AI-native systems for defense and intelligence applications. EMSI's technology enables the delivery of actionable intelligence at machine speed in increasingly contested environments. The financial terms of the acquisition were not disclosed, but Voyager did announce it is targeting organic growth exceeding 25% CAGR, with additional upside from mergers and acquisitions. CEO Dylan Taylor highlighted the company's strong growth and execution, driven by smart investments and operations. Voyager Technologies has made an investment in Latent AI, a leading AI software company that specializes in edge computing artificial intelligence solutions. According to Voyager CEO Dylan Taylor, the investment will enhance the company's ability to deliver real-time intelligence processing capabilities at the operational edge, particularly in space-based and contested environments where traditional cloud-based AI processing is impractical due to connectivity constraints. Latent AI's technology optimizes artificial intelligence models for environments with limited computing resources, enabling data processing directly at the collection point, rather than requiring transmission to remote cloud servers. The investment aims to accelerate Latent AI's product development and broaden its hardware reach, allowing the company to perform enhanced AI applications and analysis on Voyager's space-based platforms, including onboard processors and avionics suites. The partnership will also cultivate a larger partner ecosystem, speed up innovation cycles, and deliver improved edge intelligence to defense, space, and industrial customers. Voyager maintains a strong liquidity position with a current ratio of 5.6, indicating robust capability for strategic investments. Latent AI's CEO, Jags Kandasamy, noted that the partnership addresses challenges in environments where sending data to distant cloud resources is not feasible, and the technology could be implemented on Voyager's space-based platforms. The investment is part of Voyager's strategy to enhance its capabilities in edge computing and artificial intelligence, and the company plans to develop an expanded partner ecosystem to serve defense, space, and industrial customers. For more on stocks and crypto, follow Ascencore. See you next time.